Ladies and gentlemen, welcome back. Another episode of TCP. About to get underway. We've got episode 57 with Wolf Financial. I'm fired up about this one. Noah and I have been looking forward to this. Know what's going on.
Alejandro, it's good. Like you said, this is going to be a really interesting episode. You know, we've been looking forward to getting Wolf on really since the start of the year. And so everything comes full circle. End of the year, it's about to close out. And we're finally able to get him on. So excited to talk to him and talk about his journey.
All right, so let's do it. Wolf Financial. Wolf. Welcome to the show. Welcome to the podcast, brother. How you doing?
Great to be on here, guys. It's beautiful Friday if you enjoy the cold Northeast. So I'm excited to be on here.
Yeah, you're probably talking to the wrong guy. Beautiful Friday. I look outside my window. It's 40 and rainy. I don't know about beautiful, but it's beautiful to be headed into the weekend. I understand that you just got back from Paris, which is phenomenal in Miami. How were things there on those two trips?
Yeah, in your opinion, probably significantly more beautiful than the cold Northeast, for sure. Paris was pretty cold, but it was nice to be able to go there. I was there for a conference that Ledger brought me out for, and I got to also tour around the city, see the Eiffel Tower, Arc de Triomphe, a few other cool spots. And then Miami is always great. You know, it's a pleasure always being in Miami. Got to be downtown, right actually next to the old FTX Stadium. So that was a fun spot to be in. And enjoyed being down there.
So I'm originally from Florida. That used to be the American Airlines Arena. I didn't even know it became the FTX Arena until Noah told me. He's like, yeah, that's the FTX Arena now. And that was when all this stuff was coming to light. So that's awesome that you were there, though. But let's get into it, man. So we're going to start the interview here just by asking you about your background, how you came to be Wolf Financial. I mean, everybody on Twitter pretty much knows you. I mean, you have over 100,000 followers. You're always hosting these spaces. But how did you really get started in finance and in the markets?
Yeah, appreciate that. I have a typical financial background. I went to college and studied finance. I was doing finance stuff even before that, a little bit in high school. I think that the really big jump for me into the stock market started all the way back in a macroeconomics class in high school where I was playing in a grade-wide competition and tournament with paper trading against my whole grade. And not everybody was into it, but all of a sudden I was sitting there 9:30 a.m. in physics class, just day trading for hours a day in high school. You know, fast forward, I was in college. I got a finance degree. I worked at Goldman Sachs for a little while doing private wealth management there, managing about, obviously I was an analyst on the team, but helping in the assistance of managing around $5.5 billion AUM. And then outside of that, I also worked at a private equity firm. Actually, this one was called Versa Capital Management, and worked there as a portfolio manager, really overseeing two companies. And then when COVID came about, I had the opportunity to go into the startup world and really start building something there. It's a long story, so I'm happy to go into it if you guys want it. But I basically came into the startup world. The startup that I was in went through a series of pivots. They ultimately ended up with me pivoting with the startup's original brand and everything into a social media presence on Twitter. And that really came about from me trying to build a social media presence for the startup, finding Twitter Spaces, becoming the first person to host organized panels on Twitter Spaces, seeing extreme success there, and then pivoting all the way into just doing that full time rather than working on a product or anything else and just making my home Twitter Spaces.
Yeah, that's awesome. It's funny that you mentioned the stock market game, because that's literally exactly how me and one of the other traders on our team, Money Manners, sort of got into the market. Like we had this class and it was the same thing, economics class. And, you know, we had like the little competition and we took it so seriously. Like we were literally just scalping in the back of class, like running up the account to like millions of dollars, like, and I was hooked like instantly. And I know it's crazy how like those little experiences can have like a lasting impact on you, because some people in the class probably felt like this is just another assignment, right? Like I have to, you know, you have to execute like a series of trades like to get the bare minimum grade. And I'm sure other people in the class felt like, okay, you know, this is work. And, you know, for us, it winded up being like, wow, this is amazing. And we, you know, became addicted to it and got, you know, eventually careers in it. So it's crazy how that sort of turns out. Definitely go into that story though that you were talking about with the where you had to grow the social media, because to be honest, like your Spaces, like when you were on Spaces before I even knew what Spaces was, right? And like you've really been a hallmark in Spaces, particularly in the finance community. So talk about that and how that got started.
Yeah, here's a little bit of detail around it. So bringing us back to March 2020. I'm working at a private equity firm, and I get a call from two of my buddies in college. And they basically hit me up, say, hey, we just started this new financial startup. We really have some ideas that we want to build out surrounding the idea of people need a financial education. They need to understand personal finance, and they're not getting it in college. And we want to build an app that helps promote that. And it was really leaning towards that idea of a finance-based social media, something like you've seen with a Public or a StockTwits or elsewhere. And this is back before really any of those had taken off. And I liked the idea. And they had an interesting, unique pitch to me, which was they wanted me to come on and run operations for it. So I was a little bit kind of like, oh, that's a new role for me because I'm used to being like the CFO kind of guy. But I could come in here and run operations, which would be more of keeping order, staying on top of people with different tasks, making sure that there's communication between multiple teams. Anyways, I take the job. I come on board, unpaid. It's an equity position. And we just start building. Several months later, we've built out enough of a product that we have an app that people can use and they can be a beta tester on. And we need to start getting users onto it. Specifically, we need to get people that have their own large audiences onto it. So we start building on social media with the idea of, hey, let's get a presence out there. People will see us and then we can bring them into this app. And I was tasked with really leading marketing for the team. And for me, my main area was Twitter. I'd been a part of FinTwit for a little while at that point. I really enjoyed it. I was getting some great stock ideas, some great, advice, education, things along those lines. And so I went ahead and I created a Twitter account for Wolf Financial, which again was this company that had been founded by my friends that I was now creating a presence for on social media. Over the next 6 months from that point, I was just engaging with different content creators. I took a very personable approach to it because I didn't just want to be a brand in the space. I wanted people to not even know that this was necessarily a brand off the bat. Just think it was, hey, another person that was interacting with them with a cool logo, whatever it is. And so I started interacting with people. About 6 months afterwards, come March 2021, I see my first Twitter space on the timeline. It's like 1 a.m. I'm in my room. I'm like, what is this? It's just people kind of talking over each other, right? There's not anything actually useful going on in it. But immediately I was struck by how valuable this medium could be. I've always loved the talking aspect of things. I'm not a big writer. And I was like, I think that this could be leaned into and be the next big thing. It kind of was like when people first saw Google or Facebook ads, how potent and powerful those were, how you could put a few $100 in and hit tens of thousands of people. I thought the same exact thing with this. So immediately I started making a list of people that worked at Twitter Spaces, and I started writing cold DMs and cold emails to them, personalized, talking about, hey, you're the Android tech lead. I love that. I would love to, get access to Twitter Spaces so I could try them out, whatever it is. Within a week, I had access to Twitter Spaces. And within 2 weeks from there, I had put together and I'd hosted the first organized panel ever on Twitter Spaces. I basically just had different investors come on, talk about their favorite stocks, things along those lines, but it had never been done before. And the response was great. We had a few hundred people in there. I was getting like 100 followers an hour. I was like, I need to start leaning into this. So I started hosting more spaces, bringing more people in, started getting engaged with the team. Now, you move from here about several months later, at the end of 2021, this goes back to December, the firm that I've been working for and doing this all for, Wolf, had really progressed at this point, and during 2021 had gone to try and get funding. And they'd been pitching several investors. I was a big part of this. I was COO, obviously, chatting with investing, but I was also getting a ton of my time taken up by this Twitter Spaces stuff because it was working so well. We were gaining thousands and thousands of followers, as well as great connections with other influencers who now saw us as a way to get highlighted on social media. But I could also bring in to different conversations outside of Twitter, talk to about our app and convert them to our app. Now, during the raising process, it became very clear that this is a super, super, super busy space, right? There's a lot of people that were trying to build out social finance platforms. And if you were going to get funded, you needed to have something special, specifically something that was a moat, right? Something that was going to stop other people from copying you and also get more users onto your platform. Our company came up with a very, very cool technology, which we were going to institute inside of our app, which was basically an insurance feature for investors. I won't go too far down that road right now. It's a very, very interesting idea, but I'm a little bit under NDA. And when it comes to it, that idea was like the spark that was seen as this could be what makes our app different. The thing is, when that got taken to investors, the investors said, we love that concept. Why are you even building out a social finance app? Take that concept, scrap the whole app, build out an API, and sell this straight to the brokerages. Sell this B2B. Why put it into your own app and limited and people have to come there. Like you can make so much more money elsewhere. So the co-founders decided, hey, like that makes sense. And they decide, hey, we're going to do a massive pivot here. We're going to scrap what we've been building on for 2 years. We're going to just go out and build this API and we're going to go B2B and we're going to rebrand. So I get approached with all this and it's like, hey, you know, everything you've worked on for a year and a half, like we're transitioning, we're changing, we're shutting this down, we're doing this. And I'm like just kind of taken aback. And I start talking to some of my advisors and I realize real quick that I need to be the one leading here and I need to kind of make that forward step move. So I come back to the co-founders and I say, hey, like you guys are going to pivot here. And that makes a lot of sense, but you don't need the social media side of this anymore, right? You're going B2B. You don't really need to be engaged. And all you can do if you sell to someone else is get money. What I can give you is equity because I'd already vested equity in this firm. So I went and I used a portion of my equity in the firm, made a pretty sizable bet, I would say, on myself. And I bought the entire Wolf Financial brand, which I had built pretty much for this company. And I bought it off of the startup and I spun it out as purely a social media marketing firm based off of Twitter Spaces. That was last December. It's been a full year since. The account's gone up almost 100,000 followers in that time. I've hosted pretty much 30 to 40 hours of spaces almost every single week since that time. And I've really, I think, found like a honed in niche. And, you know, that company's still doing great. I still own a percentage of that company as well. I'm still in contact with them. I literally talked with the CEO of that company last night. So there's, you know, good relationships there, but it was crazy that we were able to both pivot into successful companies.
Wow. You know, it's funny because just seeing what you do and like the spaces, you would have never, ever known how it really came to be, which is what I find to be the most interesting thing. But I guess you were the only guy with the vision. So congratulations to you. And it really took off. So the 100,000 followers, that was all within the last year. So when you were first starting to host these spaces, you weren't nearly as big as you are.
I started hosting spaces in March of 2021. I was one of the first active spaces hosts. I had 500 followers when I first started hosting spaces. It had taken me, 6 months to get to 500 followers. When I started hosting spaces, I went up 1,000 followers my first week, another 1,000 the next week. And it pretty much just kind of continued along that path. And by the end of the year, I'd hit 35, 40,000 followers. And now we're almost at the end of this year and I'm almost at 125,000. So it's certainly continue to grow. I wouldn't say spaces are as good of a growth hack as they used to be. The market's a lot more saturated. Everybody can host spaces. They're all over your timeline. In the early days, like this was just super growth hack. I wish I'd hosted even more in the early days, to be honest. I just didn't want to overload people with content. And then eventually, I think going into January, maybe even a little bit sooner, I just realized people want this content all day, every day. There are podcast people like me. Like I'm a podcast person. For me, music is something that I enjoy socially with other people. I don't walk around on my own listening to music. I listen to podcasts because I want to have that people talking and me listening and always learning something. It's kind of my mentality. It's like, if I'm going to be just doing busy time, I want to learn something, and it can be sports. It can be whatever it is. And I think a lot of people are the same way nowadays, where they always want to be learning and intaking new information. And people will just sit there and tune into our spaces all day long, regardless of what we're talking about, because they just want to be taking in information and learning something new. And once I realized that and really expanded the programming, that's when things started to take off.
I'm the exact same way. I listen to podcasts in the car, like when I'm driving somewhere. I think it's because there's so much information out there right now, right? Where it feels like you can't really get it all. But if in your free time, whether you're driving, whether, like you said, you're walking around, if you can listen to a podcast and get, something that you didn't know an hour before, and it's at least somewhat relevant to you, like you said, sports, right? If it's finance, which, obviously we all love, that to me is such that invigorates me. Like I look for that like every single day. And so that's where I think you guys do a really good job, is because people are constantly wanting to learn. There's constantly going to be new people flooding into this space, right? People who want to learn about markets, people who want to learn about trading. And I think you guys have positioned yourselves as a safe place where you can go to constantly be learning, right? Like you're anytime you tune into a Wolf Financial space, you're going to leave knowing something that you didn't know when you came in. And so that's what I really love about, what you guys do.
Yeah, I appreciate that. And that's certainly the goal. And I hope that the rest of the audience feels the same way, because a lot of people are super busy throughout the day and they don't have time to necessarily do a lot of that own research for themselves, right? Or to be watching the news on a regular basis. It's like, for me, like The reason that I follow sports personally is because I think it's an incredible topic and icebreaker. And I end up at a lot of different networking events. And what I found is that you could always talk to people about sports. So like if I just show up to some random thing and I start asking people what their favorite team is, that's great. The problem is I don't have time to actually watch sports, right? Like I have football Sunday, like that's sacred to me. But outside of that, like I don't have time to go watch basketball. I don't have time to go watch baseball. I don't have time for this. But I can throw a podcast on, listen for 20 minutes, get the recap, go to my networking event, and immediately create bonds that then lead me into the finance talk. And people could do this for anything that they're interested in. I think that that type of stuff just saves a lot of time. So that's what I hope to do with these spaces is you could come in for an hour a day, 2 hours a day. You get all the information that you don't have the time to be doing distilled for you and given to you, right on a platter. And the best part is, of course, that it's free, right? It's always free for the listeners. I don't have a Discord. I don't gateway charge anything like that. Like it is literally 100% free. Nobody has to like pay for it. I don't sell a course, anything like that. It is all free.
So I want to talk now because in following your Twitter, a lot of your tweets are about personal finance and you're young. I'm assuming you're around Noah and I's age. And a lot of the stuff that you talk about is about wealth building. And I think that people are really drawn to that idea in general. Is that a message? And just by following you again, it's pretty obvious that it is, but is that like one of the main messages that you as Wolf Financial try to drive? Is that one of those things that, you're really using your platform to get through people's heads? This is what investing can do. This is what taking control of your finances can do. Especially this past year, things have been very, very difficult for people inside of the market and outside of the market. Finance has just been in kind of a whirlwind in general. But I see through your tweets this message of let's keep going, take control of your finances, invest. Why are you so passionate about that idea?
Yeah, it's a personal mission on a one note, I would say. I've shared this on a couple of other podcasts, so I'll state it on here. This is something that's been ingrained in me since childhood. In 2008, it was a really big reckoning for my family. And I was just 10 years old at the time, to be quite honest, but I remember it very vividly. My father had been a doctor for 20 years at that point, and he had taken all of his money and invested it all into real estate in 2006, 2007 area. And that was a very big change in 2008 where my family had to declare bankruptcy. And I went from being like, kind of like, in that rich, affluent growing up area into a very different lifestyle, really on a very sudden swing over a couple of months. And I saw a lot of how money worked in life. And I think the biggest thing that stood with me at the time was, I don't want to make those same mistakes. Because what I realized is so many people, the problem's not how much money they're making. It's where the money goes. It's how they spend it. It's how they invest with it, right? So many more people could be living, I think, happier, more enjoyable lives if they understood what to do with that money. And that was really the starting point for me. That was a huge motivation and booster of like, I don't want to ever be like that again. And, it went through college too. I never took a penny from my parents to go to college. I paid for my entire way through college. I was an RA. I worked jobs throughout college. I paid off all my private student debt. I've never taken any money thing like that from them. And my goal is to help my parents out, to be there for those type of things. And so when it comes to other people, I think that there's a lot of messages that you can put out on the timeline. I try to get through to people with statistics, numbers, ideas, and also just showing them like, you can see how much the mentality has changed. A year and a half ago, you told somebody 10% a year and they said, why would I ever settle for that? Now you tell someone 10% a year and they go, where can I even get that? Right. And it's just finding that middle ground and educating people through the processes. And also just things like consistent DCAing into a system, having tax advantaged account setups, so you can take advantage of those benefits. Little pieces like that I wish, I had known earlier. I'm glad I got instituted by this age, obviously still at a young and early age, but there's so many people that are decades older who never had that instituted. So that's a lot of the mission and the goal with those tweets, with the spaces. It's all kind of part of that same ecosystem to just get people on the same page. And to be honest, like have people not have to go through what I went through.
Yeah, I think it's a lot. Like if you don't come from a family that actively invests in things, like that's not something that you're going to just pick up like off the street, like, cause they don't really teach you that like in school. Right. Like, and even me, like I majored in economics. I got a master's in finance. Like, yeah, I learned obviously like, about the stock market and I learned about investing, but like up until then, like up until I paid Penn State $50,000, like that's not something that I just knew. right? Like it's not something that you come across. And if it's not in your family, if it's not like talked about constantly or often enough, I feel like that's something that can sort of go over a lot of younger people's heads until it's a little bit too late, till they're in their 30s, till they find a partner, till they have kids, and they say, oh, wait a minute, I need to start thinking about the future. And by that time, you've given up so much in opportunity cost by not investing this whole time. So I think, really trying to drive that point home, particularly to younger people, is extremely important, like you mentioned.
Yeah, I tell people, don't tell me small amounts don't matter, right? You put in even a couple bucks a day, right? Or $20 a week or whatever it is, like these things are going to add up. And what the other big part is, if you can get yourself into the mentality that you should be investing more, and people really only think that like investing is stocks. There's so many ways to invest, right? You can invest into stocks, bonds, real estate, crypto. You can invest into a company. You can invest in yourself, right? By buying courses. There's a lot of different ways of investing. It's really just creating a lifestyle that forms around those habits and isn't, eating out every single night, right? Buying a car that is the same cost as your yearly salary, right? Buying like different like pieces like this, which is just been normalized because that's what society considers rich, right? I often tweet, it's one of my like common things that I hit on is there's a very big difference in my mind between rich and wealthy. Rich is when you look like society tells you you should, and wealthy is when you're actually happy financially, right? And there's a gap between the two, and just try and get to people so that they can understand and focus on that gap, because there's just things that people don't need that they spend on nowadays. Consumer spending is at, I mean, I'd have to like look up the data right here, but I'm pretty sure that the consumer savings rate is at an all-time low right now. Literally the amount that people keep from their paycheck is at an all-time low, and consumer debt is at an all-time high. And that is a terrible scale to be on.
Well, I actually saw a note from, I want to say it was B of A the other day, that a lot of the luxury brands are being held up by an increase in spending from younger people who are still living with their parents. And so instead of spending money on rent, they're living at home, which there's nothing wrong with that. You can live at home, but they're using that money that they're not spending on rent to then go out and buy Louis bags and Gucci purses and things like that, which is like, it just doesn't make a ton of sense. You know what I mean? It doesn't.
It does for your Instagram.
Yeah, exactly.
Tell you that much.
Hey, Noah, what do moving averages, RSI, and MACD all have in common?
They're all lagging indicators from the 70s with weak ability to predict future price action.
Exactly. Modern retail traders need modern trading tools. That's why we've partnered with Rocket Scooter, an artificial intelligence and algorithmic charting tool that predicts where high volume will occur before it happens.
That's right. Rocket Scooter's 15 unique indicators help visualize in real time where institutional players are interested on almost any stock, and gives you a clear-cut game plan for how to take advantage of the underlying mechanics of the market.
A platform like that probably costs a ton of money.
Well, for 7 days, Rocket Scooter will offer their groundbreaking technology completely free. Then, once you decide you're ready to become part of the Rocket Scooter community, for a limited time only, Rocket Scooter is offering 50% off their monthly subscription for life, as long as your membership stays active. Go to rocketscooter.com and sign up for the monthly membership using coupon code WOLF and lock in this rate forever before it's gone. That's WOLF, all lowercase. Let's dive into it then with the current sort of state of things, right? Like you said, we have basically consumer saving at all-time lows right now. What are you sort of seeing as far as the economy goes, as far as the anticipated economic slowdown next year? And what do you think that means for people who are just now trying to get into investing? It can be really scary to sort of jump into investing when things are not looking so great, right? Like it's easy to jump in during a bull market when everything goes up. Let me just buy real estate. I know it's going to go up. Let me buy stocks. I know they'll go up. When we're in a time like right now, when things are uncertain, I think that people become a little bit more apprehensive. But I would bet that, you and a lot of the people that you talk to, you would say that this is one of the better times to invest, when things are coming down and, people aren't necessarily suspecting that this would be the time.
Yeah, investing is really hard, right? It doesn't always make sense intuitively. And that's why people end up making poor decisions within it, because they're simply just going off of instinct and emotion, right? But that's not the way that you need to look at it. I think back to the last 2 times that we had major dips back in the end of 2018. If you guys remember that one, we had a bull market for almost a decade at that point, and the stock market started dipping. And I had, really the privilege at that point of being around a lot of really smart people, because I was working at Goldman at the time. And a lot of the people around me, I would talk with them on a daily basis to be like, hey, like Dow was down like 1,000 points. What's going on? And they'd be like, oh yeah, we're buying another $30 million of SPY today. And I'd be like, like, whoa, like what's going on? What's the theory here? And they're like, look at the Fed. Are they tightening? Are they easing? Right? We're looking at interest rates. They're still super freaking low. We're looking at the 10-year. We're looking at like all these pieces. And they kind of laid out the picture for me of, hey, the economy's still in a healthy place at this point. We're still very optimistic on the future of it. This pullback is happening for XX and X reasons. There's worries with China. There's some other concerns that were going on worldwide. We see this as a buying opportunity because the stocks that we really like are now on discount at this point. And then again, in 2020, in that March of 2020 area, when I was working at the private equity fund, I just have these vivid memories of being at the lows and everybody's freaking out, right? And I'm listening to portfolio managers in the back, and they're like, one of them was like, "Yeah, I just upped my position by 40% in the S&P 500." I was like, 40%, like right now, like we just triggered circuit breakers for the first time, and who knows how long the other day. It went down 7% on SPY. And what I had to realize is, with investing, like you're talking about, it's kind of like what Warren Buffett said. It's really a matter of patience and also buying when there's fear and blood in the streets and things along those lines. Now, there's a little bit of give and take with that. Right now, I think people have some reason for concern. We're technically in a recession. We had 2 negative GDP prints. We're seeing a lot of the large tech companies have massive layoffs. So there's a higher unemployment rate that's undoubtedly to come. We're also still in a quantitative tightening era right now, where it sounds like the Fed is going to have at least another maybe 1 or 2 rate hikes going into next year. Then maybe they'll keep it at that point, but they want to wait for inflation to come down. So I understand that we're in a little bit of a different situation than we were earlier. But overall, I'm optimistic on the future of the U.S. economy. That's mainly where all my investments are taking place. So for me, I think that it's important to have a strategy overall when it comes to investing, right? Because I think a lot of people, and when they're simply saying like, should I buy now? Is this a good time? Should I not buy now? It just doesn't sound to me like they have strategy. And I spoke about my strategy on a space yesterday. And I stated that right now I have 2 main strategies. The first one is automated, right? I have an automatic DCA strategy. And why do I have that? Because that allows me to completely take emotion out of the picture. And it also is built for my time horizon, which is 30 plus years at this point, right? And so automatically every single month, I have money that comes out of my account and gets invested into broad-based index funds. I don't touch it. I don't even, sometimes I try not to even look at it. Like I get a notification, but I don't even like look at that, and I don't care to. That's going to be there for decades, right? And I have an understanding of how the S&P works. And then on the other side, I have a relative strength portfolio where I kind of supplement it by saying, okay, well, what are the hot sectors right now? Where are inflows going in towards? Where are the large institutional buyers headed towards? And this year, obviously, that's been oil, energy, right? You can look at financials at different points of it. And I try to supplement my automatic strategy by placing money into hot sectors with strong RSI. Now, what I'm not trying to do is necessarily hop into, specific growth stocks that are going to be getting squeezed by higher interest rates, right? Like, I don't think that those are necessarily the hot sectors right now. I may play puts on them, right? To have some downside and stuff like that. But what I really think, for people that they should remember and get in their heads is investing takes time to learn how to do. It takes experience. You're not going to be an expert in your first couple of years, right? That makes sense. There's a reason that people are losing money. And really, I tweeted this out today. I think that your 20s are for nailing down a strategy, right? And figuring out what your strategy is going to be. And maybe it's just automatic DCAing into long-term investing, into broad-based index funds. Maybe it's a relative strength one. And then your late 20s and your 30s are for taking as much money as you can and putting it into that investment strategy. But what you really can't do is never have a strategy, simply invest based off it's going up, it's going down. And, just like putting your money into names that you see an influencer say on social media, because welcome to Atlas Trading, that doesn't work. So there's like a lot of pieces here to kind of get into. But I think that the first thing people should understand is like, just because you lost, money this year, last year investing, that doesn't mean that you're a bad investor. It doesn't mean investing isn't for you. It doesn't mean you should just be putting your money into a bank account forever. It means that the stock market is going through a lot of turbulence right now. We're in our first potential recession in a while, but you still have to figure out a plan. And if you can't come up with a plan, there's a great thing, which is called hiring a financial advisor, which people should do. And that, I will say, is one thing that I've really, really started stressing more and more nowadays, because I think a lot of people are terrified but they're just going to social media and they're trying to get answers from there. And at the end of the day, it's fine to go and hire a financial advisor, pay them 1%, pay them $1,000 or $2,000 a year. They're not that expensive. They can get you on that right page. And at the very worst, they can bring back some confidence into your investing strategy.
You talked about there's like that sort of when you're first starting to invest, you said it, in the first 1 or 2 years, even the first 5 years, you may struggle. You may not understand the markets. You may not really know what you're doing. You're going to make mistakes. Everybody makes mistakes early on in their investing careers. From your point of view and from your experience investing, that period of the first 1 or 2 years, how should people approach it? Because there is that learning curve, but unfortunately, what happens to a lot of people is they end up paying that market tuition. So you're paying to learn, which is what scares people. That's the scary part. That's what gets people out, or they start off on the wrong foot. You lose money. You say, oh, F this, I don't want to invest, right? So would you recommend people take their hard-earned money, start investing passively, whatever you talked about, having an automatic DCA strategy? I think that that's phenomenal. It's been proven, obviously, that investing in the S&P, even if you're buying one share of SPY a month or one share of SPY every 2 months, that can be huge over the long term, dependent on your investment horizon. But in general, how do you think people who don't know much about the market, don't know anything about the market, should approach things early on in those first 1 or 2 years?
People need to do homework when it comes to these things, right? It cannot just be, I'm going to take money and put it in and it's going to go up and I'm right, and it goes down and I'm wrong. That's not how simplistic the market is. If you're going to be an active investor that's picking individual stocks and trying to beat the S&P, because that's what this breaks down to, right? The very basic strategy is 90% of hedge funds are not beating the S&P 500, right? Like that is just proven. That's how it happens, especially over 5 to 10 year periods. So at the very basic, like people should know that there is something to fall back on here with that automatic, investing strategy. Now, if you want to be picking individual stocks, and certainly they're going to have their ups and downs there, what you need to be doing is detailing exactly why you made a purchase so that you can learn from it, right? And this comes down to journaling, in my opinion, right? If you're swing trading, if you're consistently investing in different areas, if all you did throughout the year was you bought some stocks here and there because maybe it was a good technical support, or maybe because you saw people talking about it, or you heard a good piece of news, and then the ones that didn't work out, you just sell them or you take the loss or whatever, you move on, that's not going to work. What I really think you have to do is reflect back on it and look at it from time to time and say, all right, why did I enter that one? What was I looking at? What was the setup? What was going on around it? Journal that down and then write about what happened afterwards, right? What did it end up leading to? The stock market moves in a series of patterns. It repeats over time. It certainly rhymes if it's not exactly repeating. So the more that you can look at things, the more you're going to start making correct decisions. It's really not that different from a lot of lines of work, a lot of positions where people have to learn over time by journaling. So what I'll tell people is, like you were saying, people are paying to learn. Well, we also pay to learn in school. And you know what school gives us? It gives us homework, right? And it tells us, hey, take this home and here's some after your work stuff. And then we have tests, right? And we have examinations to see if we actually learned anything. And the problem is the stock market right now is just a little trial by fire, right? There's nobody that forces you to go and actually do homework or forces you to do a test. Big banks and institutions are happy to continue taking your money for as long as you will give it to them. So it comes upon us as investors to, I believe, do things like tune into Twitter Spaces, to take a course, to speak with a financial advisor, to build that knowledge around it so that the way that you learn is not simply by losing $1,000 a week, right? And I think that it's like putting the pieces together. And this might be hard to hear for a beginner investor who's only seen it for a few years, but I've seen it myself. Every year that I've invested, I've learned a lot more. I make better decisions, right? I lean into different things. Now, that doesn't mean you're going to make more money every single year. Your amount of money that you make could be dependent on the stock market. What it means is you're going to make less mistakes, right? Each year as you continue going. And then those, just like the money in the market, will compound, right? And as you make less mistakes, your gains will compound, your knowledge will compound, and you'll continue moving with it. And hopefully over time, you can build out that nest egg that you need in order to become wealthy. But it's investing in yourself. Like, I think people I guess the market really threw off a lot of fundamentals, right? The last couple of years. But it's just like anywhere else where you study it and you learn to understand and you research companies. Like we know this because like we took finance classes, we got a degree, we understand how to break down companies and examine them. It's not happening by chance. It's not random. There's a system here and you have to learn it.
It's interesting. So I just looked it up to confirm. Warren Buffett didn't make his first $1 million until he was 32 years old. And we're talking about like investing early on here, early 20s as a teenager, if you're lucky enough to do so. I think a lot of people get either deterred by this idea that, all right, everybody who made money investing invested super early on. But realistically, it's never, ever too late to get started. You know, I mean, there are people who go an entire lifetime without investing money, whether it's because of stories like your own. The 2008 story, you talking about that and your family investing in real estate and losing everything. A lot of people would see something like that, and that first paycheck you get working goes into a savings account, and the next, and you could have very easily adopted this mindset of, I'm not going to invest a dime because I saw what happened to my dad. I saw how hard he worked. He decided to invest his money, and then look what happened. Things went south. But it comes with being educated. And I really, push for people, regardless of their age, regardless of, when they plan on retiring. A lot of the people that trade with us in our Discord are older than we are, in their 40s, 50s, even people who are retired. It's never too late to adopt that mindset of trying your hardest and learning to understand your finances. And investing doesn't have to happen. If you're 35 years old right now and you're listening to the podcast, if you're 45 years old right now and you're listening to the podcast, and you've never invested, it's better to start now than you're 65 and you're going to wish you had an extra $1 million in the bank, right? Had you just contributed to an IRA every month or something like that. So I think that people, regardless of their age, should be very, very encouraged and see what investing could do. And they should be willing to invest. You should want to invest. It's never too late. That it's too late mindset can be very dangerous.
And tax benefits, right? And all these other pieces that you can get in the investing world. Like the government wants you to invest. Like they're incentivized to have you invest. So there's things that you need to take advantage in those areas. And I'm obviously talking a lot about these different things here, but I didn't make any of this up or anything. All I've been doing is sitting in spaces for the last 2 years, bringing on people who have decades more experience than me, asking them all the right questions so that I can get all that knowledge that they've absorbed. Right. And now, I can output it back with a little bit of my own spin on it. But the real thing here that I'll say also for anyone that's listening is I am by no means the greatest investor. I'm not, the best, but in 6 years, I'm going to be a much better investor than I am now, right? I can't wait to see how good of an investor and a trader and all those things I am then. Why? Because I'm starting now, because I started today. And it's the same thing. It's literally the same thing with social media, I think that building an audience is honestly one of the most powerful things that you can do in this world. Having an audience opens up so many doors in life, but literally you have to start today. You can't say, I'm going to start doing it in 6 months. You're never going to get that audience built. You're never going to get the first 100, 1,000, 10,000 followers. That snowball has to start from somewhere.
Reminds me of the podcast when Noah and I first decided to do it. I mean, God knows how many people were listening. And now, we've got a pretty strong listener base, but we're over a year into this. We've been doing this, for 14 months now. And now it's is when it feels like, all right, this is a podcast, at first it literally was just us, talking to each other, trying to, with no, had we have had the mindset of, all right, this needs to happen in the next 2 months, we probably would have stopped. But it was slowly but surely we just grew and grew and grew. And, now we've got guys like you on, and we've met so many people in the community. And yeah, I mean, if you are trying to grow that follower base, the first step is just doing something. Just doing something. It's going to be awkward. You think that no one, I remember the first episode we made, I was shitting my pants. I was so nervous. I was I've never talked into a microphone before. What are people going to think about what I'm saying? It's a lot of it is in your own head. Definitely. A lot of it is that mindset of, oh, I can't become Wolf Financial. He's got 100,000 followers. Well, Wolf Financial didn't always have 100,000 followers, guys. I can't become TCP. Like TCP was nothing a year ago. TCP didn't exist, right?
Yeah.
So
I actually read, I was reading, actually, I got an email in my inbox this morning. I don't know if you know the newsletter, The Milk Road. A couple of my friends write it, Sean Puri and Ben, I'm blanking on his last name right now, but they literally started that thing in January of this year with the idea of just like, hey, I think we could write an interesting crypto newsletter. 11 months later, they have 250,000 followers and they got acquired today.
Wow.
It's crazy.
That's sick.
That was less than a year.
There's stories like that everywhere. There's stories like that everywhere.
I loved in their like acquisition email, they literally put out screenshots of their texts of like, hey, you want to like start writing something? Like, I think like we could do something here. Like, it was like, there was no like, we're going to build a 250,000 follower newsletter and get acquired. It was just like, let's start.
Yeah, I got to find these texts of Noah and I talking about the podcast. I was like, I was just like, dude, let's do a podcast. And to make sure it happened, I like sent him the screenshot of me ordering my mic on Amazon.
Yeah, Hondo.
And then like the next week,
Hondo is pushing hard. I was apprehensive. Hondo is like, if you don't get your shit together, like you better figure it out. But yeah, I'm obviously glad we started.
Yeah.
I want to ask you about Twitter itself. So FinTwit can be an area where you can learn so much, right? You have people like Wolf Financial, Kane Capital, a bunch of really honest people who just want to help, right? Who are also trying to learn, right? I'm not somebody by any means who knows anything. I'm on there to learn myself. And if I can share what I learned, then, that's great. There's also people on FinTwit, as we saw this week, who are maybe not the best types of people, right? And so how would you, if you were somebody new who was trying to learn more about finance, more about trading, more about investing, how would you go about navigating FinTwit and finance Twitter itself? Because like I said, there can be so much opportunity and so much good information, but there can also be traps that you fall into, right? And you just want to be careful and safe. So if I was new and I was, coming to FinTwit, obviously after following Wolf Financial, what would be my second step? How would I go about it?
I think there's a good handful of follows on there. First, it depends on the style of investing that you're looking to do. If you're looking for long-term investing, I think that there's certain people that would be great to have on your timeline for that, like a Brian Feroldi, a Doug Boneparth. There's people that are really push you in the right direction. And if you're looking for day trading and options, there's great people on that end too. I always stress to people to try to get it's hard to get a good sense of judgment. I luckily over time have built up a really good feeling for who's doing stuff that's shady, who's actually a good trader, who's not a good trader, who is, and that's because, to be honest, because I bring people on live and I have them live call out plays and explain them, and then I can watch what happens, and then I can gather like a year of data on that person. Be like, all right, here's my assessment, right? So that's the way that I go about it. But the first thing I would say is don't pay for any of these like access or anything right off the bat. Before you really think that it's going to be something that is beneficial for your style and you're very comfortable with that person, right? So anybody that's on social media, before you go and like pay $150 to hop into a Discord or something like that, I would really just try to like take a look through their content regularly. I would go, a lot of them have YouTube channels as well. See if they're creating like educational content on YouTube regularly, watch through it, get a really good feel like if this person appeals to you. And then if you are going to actually hop into one of these Discords or something, if it's really like, if you're having the same problem over and over, which to be honest, here's the problem that was happening with all these people knew that they were getting call outs, would go right to the option and be like, why is it already 20% higher than I heard that call out a minute ago? And be like, oh, well, maybe just options move quick. And then they get in and then they get dumped on, right? And that was happening over and over and over. And if that's happening to you 5 to 10 times, get out. Stop trying to like make something work that isn't working. I think, that's a big thing for social media that I was hearing. Like I've been listening to these spaces about Atlas. People are like, I thought it was going to work eventually. I thought I was going to, hit that triple bagger, right? Like, because it happened one time or something like that. I think it's just looking for consistent results in those areas. And then the one other big thing that I would look towards is finding someone that you can trust in the community, building a relationship to the point where you can get into the DMs, right? Maybe by commenting on the timeline a number of times, adding your own thoughts and stuff, and then ask them for their thoughts on other people, right? Like ask for recommendations of who do you think would be good. Ask people that have been in the community and really understand it, for who they think would be good to follow and stuff along those lines. I used to put out like weekly, like here's people who I think are good follows, right? Like that's something I used to put out weekly. I don't do it as often anymore, but like I still try to put out threads maybe every month or two, and recommend people. So I think like look for different recommendations in different areas. But yeah, it starts with like, don't pay off the bat, look for the free content, sort through the free content. I don't think you can really get necessarily hurt by this free type of content at those areas. Now, obviously, there's levels within that. The one thing I would say is like if you're new, like stay away from penny stocks, stay away from super far out of the money weekly options, right? Like stay away from certain levels of areas, look for free content in a bit of a safe level, and then look for those type of recommendations and insights that perhaps other people in the community can give you. And always, always, always remember that it is social media and there's a lot of really weird crap on there. And there's a lot of people that have their interests and their interests first. And you have to know that going into it. And you are not paying any of these people. They are not fiduciaries to you. They do not have to have your best interest first. So you kind of have to like go into it knowing that, I think, a little bit, which is hard for some people on social media. I think there's people who they trust very easy, right? And they see these profiles and they see follower count. Follower count doesn't mean anything at the end of the day when it comes to, obviously, as we saw, just how trustworthy someone is. A verified symbol clearly means nothing now. They've kind of changed these pieces up. So you have to go into it with a little bit of a protective mindset. And I wish more people like knew that. And like Twitter came with like a little bit of like a warning sticker on it, because there's a lot of people that come in and they are so naive and they're so trusting. And I think you just have to like put yourself into a little bit of guard mode when it comes to social media.
Right. I love how you said like don't pay off the bat, because I mean, look, we run a paid Discord, right? That's what we do. And I'll have people DM me all the time, like, hey, like, can you tell me what King Cap is like? And like, usually when people DM me, I can get a feeling for like how long they've been trading, more or less, like, like how much do you know and XYZ. And like, I would say for 80% of the people who DM me that, I literally DM them back before you do anything. Go check out our YouTube. We have literally 30 videos on there that you can go check out for free. We put out content all the time, every day on YouTube, every weekend, right? So like, I feel like you have to be willing to take advantage of that type of free content. And what I truly believe is that the people who take advantage of that content and then, like you said, say, okay, this person's trading matches up with my trading style or investing style, or whatever, let me join this Discord and figure it out. Those people wind up, in my opinion, probably getting more out of it, because I think that if you're somebody who's just going to jump in the first successful Discord that you see with, this guy's got 10, 100% calls in the last week, let me pay him $100. Usually those people are more like looking for the handout. Like, let me just ride with this guy because clearly he's successful. Let me just ride all of his trades. And, in a year's time, I'll build up enough money to go do whatever I want to do. Whereas the folks who really care about this are going to take the time, like you said, to seek out that free content first. And then, like you said, if you do actually enjoy the content, if you match up with the person, then yeah, sure, it makes sense. But, to be in a situation where you're sort of just looking for that next, hottest guy on FinTwit who's going to make all these calls, I think that can get people into trouble, because you're going into it with the wrong expectation, right? Like, you're not really going into it with a growth mindset. You're going into it with, I'm going to pay my dues for the next 6 months or whatever, and by the end I'll have, whatever it is I came here for. And so I think just having that mindset correct is so important in getting involved, especially on FinTwit, because like you said, it's so easy to get sort of sucked into scams and, pump and dumps and whatever it is. There's just so many treacherous potholes that you can fall into, on FinTwit. It's very easy, easier than it should be, really, to, have that happen to you.
Last thing before we wrap up the episode and we'll let Wolf go, Ryan just sent me a screenshot of the text I sent him when we were first starting the podcast. Said, do you have a background in audio editing? Would you be able to edit a podcast? He said, yes. I may have to ask you to help me in the near future. My friends and I started a stocks Discord. It's gaining traction and I want to start a podcast. August 31st, 2021. How about that? How about
Beautiful.
that?
There you go.
If that doesn't fire you up, I don't know what will.
Humble beginnings.
All right, Wolf. Humble beginnings. Absolutely. Thank you, man, for coming on the podcast. Really appreciated having you on. You shared a ton of really, really valuable information, and it was great to meet you, man. And hopefully we'll be able to work together in the future. This was awesome.
Appreciate you guys having me on. Would love to have you guys on a space soon.
Absolutely, man. We'll definitely take you up on that offer. All right, guys. Another awesome episode. Noah, I'll see you next week for episode 58.
Yep. Take care, guys.